Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The U.S. Treasury Secretary warns Iran is facing an economic D-Day as the U.S. readies what he calls the greatest financial offensive ever marshaled against an adversary. Trade talks collapse. The U.S. slaps 50% tariffs on Canadian imports, while Canada promises counter-tariffs and says it cannot see the dispute being resolved before November's midterms. And Alibaba shares tumble after it raises $10 billion in a share placement, amassing cash for the global AI race. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Happy Monday. A risk-off start to the week when it comes to U.S. futures and also Asian equities. When it comes to the U.S. picture, we're looking for two major things this week. NVIDIA earnings coming out on Wednesday, and then Jackson Hole on Thursday. That will be the Fed's annual meeting, with Kevin Warsh possibly shedding some light on what the Fed decides to do next. But when it comes to the futures picture this morning, not doing much, 0.1% lower, pointing to perhaps a negative start in the United States trading later today. And then Asian equities already taking their cues from the futures picture, 1% lower. The Kospi was dropping. We were looking at individual names in the early trading hours. Alibaba is one of them. Samsung is another one of them. Winnie will talk to us in a second about what is happening in Asian trade this morning. And then the yield on the 10-year notes, of course, the biggest story of last week, continuously into this week as well, dropping this morning 2 basis points, although it is at 4.71%. That is the level it was at before that buyback was announced by Scott Bessent. So we're seeing it at quite elevated levels, the 30-year notes at quite elevated levels as well. And then Brent crude prices, $93 on the barrel, 1.4% lower. Nothing much is happening in the Middle East. We await that press conference by Scott Bessent and what exactly he decides to say about that economic D-Day mission against Iran. But for a deep dive into what is happening in Asia this morning, we've got Winnie Su standing for us in Hong Kong. Winnie, happy Monday. What is happening?
Yeah, happy Monday, Abir. Well, we are seeing Asian stocks falling at the beginning of what is likely going to be a very busy week. You mentioned a bit of a cautious mood ahead of NVIDIA earnings and Jackson Hole meeting, but also for Asia specifically, going to be a very busy earnings week as we will have more than 30% of the companies listed on the MSCI Asia to be reporting this week. Now, as you mentioned, we are seeing a bit of a weakness when it comes to tech stocks, specifically in Hong Kong. Obviously, sentiment is quite weak when we still have elevated global yields, but specifically we are looking at Alibaba being the key drag here, down about 10%, having its worst day since April after the company having raised $10 billion in a share sale. Now, this is coming as a surprise for some analysts given how big it is, as it's actually Hong Kong's biggest secondary share sale ever. So some concerns around how earnings might be diluted and also how the company actually will be monetizing given the broad weakness in the Chinese economy. Now, flip the board, a very quick look at the other drag in the market, which is Samsung Electronics, here down about 5%. The company did announce that shareholder return plan on Friday, but some disappointment in terms of how it's more focused on dividends instead of share buybacks. Back to you, Abir.
All right, Bloomberg's Winnie Su in Hong Kong with that market update. Everything is in the red today in Korea. Now back to the regional story. Oil dropped after 2 weeks of gains. This is as markets wait to see the U.S. economic plan for Iran due to be announced later today. Meanwhile, Saudi Arabia is overhauling how its oil gets to customers as Yemen's Houthis make it harder to use a backup route, which has been vital to the global energy economy since the Iran war started. We've got Bloomberg Asia oil and trading reporter Yongcheng Chin joining us now from Singapore to discuss the latest reporting on those trading routes. Yongcheng, good morning. What is Saudi Arabia exactly doing at this point to get oil to customers around the world?
So the Saudi story is quite interesting because obviously they're the world's biggest exporter of crude oil. So what they do and how they get the oil out despite the ongoing Iran war is going to be very much in focus for for the markets and for traders. So for the longest while, the Saudis have had a very easy time to get the oil out. It's just very simply loading at ports within the Persian Gulf and just sailing those ships out. Obviously with the Iran war, that's no longer possible. It's long-standing workaround to use the Red Sea via its port at Yanbu. That's the main thing that it's been doing over these months to get its oil out. But now, given the Yemen-based Houthis are now threatening that route, the Saudis are once again being forced to kind of pivot what they're doing. They're now trying to use the Mediterranean port at Sidi Karir, which is in Egypt, by the way. But that's what they're trying to do. They're trying to sail, some of the oil out of via the Suez Canal, taking possibly, a much longer route around the African continent just to get to Asia, but it's better than not being able to get the oil out at all. So those are some of the stopgaps, also some of the ways at which Saudi Arabia is trying to get the oil out to the market, and that's been relatively successful so far. So we can see oil prices kind of still maintaining where they were rather than like shooting up, despite the ongoing crisis.
Okay, and Yongchen, right now, arguably what we're seeing is a little bit different from when this war started because we're seeing two important choke points, that is the Red Sea and the Strait of Hormuz being affected by this widening war in the Middle East. So I guess this is probably premature to answer at this point, but what does this whole thing and those two very important choke points being affected mean for future export levels?
Yeah, so it is a little bit premature, but you are right in the sense that it is a worsening of the situation. The Hormuz still under threat. Now the Red Sea choke point is also under threat. So obviously that's going to be weighing on the amount of oil that is being exported. But what we will say is that we have seen in the past countries using so-called dark tactics. They turn their satellite transponders off, they turn their lights off, they travel under the cover of night, use all kinds of methods to get themselves out of these dangerous waters. So while on paper, these choke points, these waterways are definitely under threat and they're effectively closed off. But in reality, we do see a lot of these vessels that have been coming out. So we have traders and analysts, estimating that despite, on paper, the waterways being closed, we do see, maybe 4 or 5 million barrels a day of oil still flowing out. So, it's anyone's guess as to how much oil is actually coming out. But, if there are workarounds, then, it might not be as bad as it seems.
All right. Yongchen, thank you for monitoring that situation for us. Of course, Bloomberg's Asia oil trading reporter, Yongchen Chin. Now let's move on with the story. U.S. Treasury Secretary Scott Bessent is due to lay out plans for economic pressure against Iran's trading partners later today. This is the administration's latest move to force Tehran to accept a deal to end the war on U.S. terms. Writing in the Financial Times, Bessent says, quote, "Any nation that serves as a financial artery of a withering regime should expect to share in its isolation. To become a sanctuary for terror is to become, in the eyes of the United States, a global pariah." So to discuss this story and further about the geopolitical situation, I'm now joined by Afshin Molavi, Senior Fellow at the Foreign Policy Institute of the Johns Hopkins University School of Advanced International Studies. Good to have you with us this morning, Afshin. Thank you for making the time. You heard what Scott Bessent had just said in that FT article. Quite strong words against Iran. In a nutshell, that economic isolation plan, we obviously don't have the details, but in essence, would it be effective?
Well, I think what's extraordinary about this plan is that Iran is already one of the most sanctioned countries on earth, Abir, as you know, and in order for it to really escalate meaningfully against Iran, you're going to have to go after the countries that trade with Iran. And when you're looking at the countries that trade with Iran or do significant business with Iran, you're looking at India and Turkey, United Arab Emirates, Iraq, and of course the big one, China. China imports about 80% of Iran's crude oil exports. Chinese engineering companies are an important part of Iran's infrastructure build out. China is really, in many ways, Iran's economic lifeline. And so what we're about to hear, I think, from Treasury Secretary Scott Bessent is targeting of these secondary sanctions against these countries. And that's really escalating the game.
And Afshin, the IRGC has already come out and said that it has scenarios to deal with any economic pressure the U.S. may have against Iran. What could that look like from the Iranian perspective?
Well, the IRGC, Iran's oil trading networks, I mean, they have a vast system in which they move money. They use trade houses, they use front companies and shell companies, and in the past this has generally worked for them, particularly with their oil exports to China, because it wasn't major Chinese energy players that were involved. It was the so-called teapot refiners. It wasn't major Chinese banks involved. It was smaller banks. And so, this is a system that's a well-oiled system that they have in place. The question is not whether you can sanction these. The question is, how do you enforce it, right? This is, by the way, Abir, this is happening on the eve of President Xi's upcoming visit to Washington. And as we've seen, China and the United States have both shown signs of de-escalation. If you start targeting Chinese banks, major Chinese energy companies, that's going to add new layers of friction to this relationship on the eve of this visit.
Okay, and let's just say that this economic isolation plan happens. It does target those countries that do deal with Iran. At what point do we get to a point where it is counterproductive and it actually just escalates the situation and widens the parameters of this conflict even further?
Well, I think this is where the rubber meets the road here, because you're going to have a situation where you're going to face U.S. allies like Turkey that imports a significant amount of natural gas from Iran. Iraq, 30% of its electricity generation comes from natural gas from Iran. The China-U.S. relationship, as I said, was in a de-escalatory mode. By ramping up these sanctions on Iran, it could hit an escalatory mode. And all of this, Abir, of course, is happening in a time in the United States where President Trump has hit all-time lows in his popular opinion ratings. And at the same time, the Iran war is a very unpopular war in the United States as well. So the political clock is ticking for President Trump with midterms upcoming, but there's also a pain clock that's ticking in Iran as well, because they're looking at a 6% economic contraction, 80% plus inflation, losing all sorts of hard currency earnings. So these two clocks are going to be ticking at the same time, and who blinks first, that remains to be seen.
And Afshin, just briefly, are we underestimating the risk of two important energy choke points being under attack at the time being? That's the Strait of Hormuz and the Red Sea.
Yes, I think we are, but I think also your reporting at Bloomberg has shown that there still is flows going out of the Strait of Hormuz. And several of America's allies are actually using the dark, going dark on their transponders, getting some of their ships out, idling on the Gulf of Oman. We're seeing ship-to-ship transfers. So countries are being more creative in getting some of their flows out. Otherwise, we would have seen a more significant rise in oil prices. But you can't have these two critical oil choke points blocked the way they are for much longer without oil prices beginning to tick upward much further and creating, a much more inflationary environment, not just in the United States, but worldwide.
Yeah, definitely a situation we've been keeping an eye on. Afshin, thank you so much for your time this morning. Of course, that's Afshin Molavi, Senior Fellow at the Foreign Policy Institute of the Johns Hopkins University School of Advanced International Studies. Now, still ahead, Arqaam Capital tells us just why they think the U.S. Treasury's efforts to re-engineer the world's largest bond market are, quote, similar to trying to cure cancer with aspirin. More details ahead. This is Bloomberg. Welcome back to Horizon's Middle East and Africa. Treasuries are advancing across the curve as bond investors look ahead to Fed Chairman Kevin Warsh's Jackson Hole speech later this week. Meanwhile, Minneapolis Fed President Neel Kashkari is downplaying worries over rising Treasury yields.
There's every indication that the U.S. Treasury market is functioning as it should, that trades are taking place, that there's liquidity in the market. And so that enables us to focus on the federal funds rate as our primary policy tool to get inflation back down.
Joining us now to discuss all of this is Managing Director for Fixed Income Asset Management at Arqaam Capital, Abdul, Hussain. Abdul, good to have you with us this morning. You're hearing what Kashkari was saying. Of course, this follows a week of turmoil, performance, and bond markets. What you lay out in your research is treating cancer with aspirin, suggesting this is a short-term fix. Yep. Where does that come from, and what is the real fix?
Yeah, well, I mean, I think, that's already been shown by the markets because you've already had the bounce back in yields that came down for like 24 hours, I think, after the buyback announcement, and now are pretty much back to levels that they were before the announcement. I mean, the long-term fix or the permanent fix is obviously stuff that's more structural in nature. The first thing is obviously getting the market more comfortable with inflation so that they're not pricing in rate hikes in the near term, because currently that's what the market is pricing in. And then the second aspect of it is obviously term premiums, which has got to do more with the supply of treasuries, the deficit, the supply of AI-related debt, and also the fact that the marginal buyer of U.S. treasuries is no longer the Fed or is no longer countries that have current account surpluses, but is more price sensitive, is more commercial in nature, like hedge funds, like money market funds, and so on.
Okay, so we look at the yield of the 10-year notes, 4.71%. That effectively means that they've erased gains, or the 10-year treasuries have erased gains that have happened since that buyback plan. Again, solidifying that argument that it could have been a short-term fix. But do you think that surging yields are now becoming a bigger problem or a bigger headache for markets than the Fed itself, or the lack of guidance there?
Yeah, I mean, I think obviously the more yields remain at these elevated levels, the more risk you have to asset markets like equities and other assets. I think what you're going to have to see, to be honest, Abir, is you're going to have to see two things. The first one is more short-term and cyclical in nature, which is basically, hopefully over the next few months, you get data, which is what we're expecting. You get data that's showing a weakening labor market and is a little bit more inflation-friendly. And that kind of prices out the rate hikes that the market is expecting in the near term. That should cause short-term yields to sort of come down. Term premiums will remain high because of the supply risk and the uncertainty on the buy side and the amount of AI debt out there. But if the short-term curve starts to come down, you will start to see at least some capping out on long-term yields, which should be supportive for the markets going forward.
Okay, but let's assume that doesn't happen. How much does the long-term yield go up for the 10-year and the 30-year before those conditions really start to bite?
Well, if that doesn't happen, then you're going to have to see the Fed hike. Because if the longer the Fed delays the hike in the face of data that's not supportive of their delay, the steeper the yield curve is going to get, because the market is going to keep on forcing the Fed.
So do you think they're going to hike in September?
Well, no, I don't think so, because I think that the data is actually going to come out friendly. I think that we've seen some weakness in labor markets. I think we've seen CPI start to come down a little bit. PCE is still a little bit sticky, but I think that we're still going to see a wait in September. And if we don't see further sort of reaffirmation of weaker data, then I think the rate hikes towards the end of the year could be in play.
Because, Abdul, we're still dealing with a situation in the Middle East that is plateauing every now and then, but it's still not resolved, right? So we could see this inflation resurge from higher energy prices. And yes, oil is dropping today, but it's still quite elevated or at elevated levels. Yeah,
I mean, as your guest earlier was saying, right, if you continue to have those choke points that are going to be blocked and the market starts getting nervous about oil inventories, and oil starts surging to, 100, 110, 120, then that takes the story to a completely another level. But I would think that if that were to happen, you would see the Fed act sooner rather than later.
Okay, just briefly, what are you expecting out of Jackson Hole? Do we get more from Kevin Warsh?
Yeah, it's tough for him because he's trying to kind of restructure the way the Fed has communicated and the way the Fed works. I think you're just going to get more, talk on how the Fed is planning to work. I think he's going to try to calm Treasury markets, but, we'll see.
More of the same then.
Yep.
Abdul, thank you as always for your time. Of course, Abdul Hussain, Managing Director for Fixed Income Asset Management at Arqaam Capital. Now, coming up, trade talk turmoil, negotiations between the U.S. and Canada collapse. How Mark Carney plans to retaliate against Donald Trump's 50% tariffs is coming up next. We will bring you the latest. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Turkey's central bank has decided to resume weekly repo auctions at its 37% policy rate. The move is a step towards normalizing funding conditions as officials bet the worst of the Iran war's economic fallout has passed. The bank has previously switched to an overnight lending rate of 40% in response to uncertainty that was triggered by the war. However, the central bank has not specified when the auctions will restart. Singapore's Prime Minister Lawrence Wong has announced a package of childcare benefits to support families. This comes as the Lion City grapples with a record low birth rate and rising concerns over the cost and pressures of raising children. Wong used his National Day rally speech to announce that each child will receive the equivalent of about $55,000 in direct assistance through the age of 17. And the red Tiangong Ultra, made by Beijing-based X-Humanoid, has beaten Usain Bolt's world record in the 100-meter sprint at the World Robot Games in Beijing. Chinese media is reporting that the humanoid robot won the race in 9.39 seconds during the game's opening ceremony. The games featured 1,300 competitions and 666 teams, drawing more than 2,000 humanoid robots from around the world. Now, a quick look into where risk assets are sitting before we head to the break. Everything is in the red. S&P futures still 1/10 lower. Nasdaq, Dow Jones also dropping. And Euro Stoxx 50 futures flat this morning. And then we take a look at Brent crude and NY crude, and those two are dropping this morning as we await that press conference from Scott Bessent and what that economic isolation will look like. And coming up, Alibaba raises about $10 billion in Hong Kong's biggest secondary share sale. More details on that story are coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The U.S. Treasury Secretary warns Iran is facing an economic D-Day as the U.S. readies what he calls the greatest financial offensive ever marshaled against an adversary. Trade talks collapse. The U.S. slaps 50% tariffs on Canadian imports, while Canada promises counter-tariffs and says it cannot see the dispute being resolved before November's midterms. And Alibaba shares stumble after it raises $10 billion in a share placement, amassing cash for the global AI race. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take another quick look at where markets are sitting at half past, still in the red, although S&P futures are flattish at the time, being 1/10 lower, so not really changing that much. Of course, two things we're looking out for. This week on Wednesday, we get NVIDIA earnings. That is the bellwether of AI. That is the biggest story in AI, and that is what matters the most for the tech story. And then, of course, Jackson Hole, which is happening on Thursday. We'll see if we get more forward guidance from Kevin Warsh. Markets don't seem convinced, but with those elevated yields, perhaps one can wish. And then Asian equities are dropping about 1%. They're about 1% lower. We're keeping an eye on individual names, Alibaba, Samsung. Winnie, in just a second, will talk to us about what is happening there. And then the yield on the 10-year notes dropping this morning, but still at quite elevated levels. The 10-year notes the yield on those is at 4.7100%. So falling from what we saw last week, but still at the levels that were there before that buyback announcement by Scott Bessent. And then Brent crude prices $93 on the barrel, 1.4% lower this morning. One thing we await for that could change the trajectory of where energy is going is that press conference by Scott Bessent about the economic D-Day and what exactly the details of that economic plan against Iran will be. That is set to be later today, of course. Now, for a look at what is happening in Asian markets over the past 30 minutes, we've got Winnie Su again in Hong Kong for us. Winnie, what do you have for us?
Yeah, good morning, Abir. Well, we are seeing Asian stocks falling after 2 days of gains. Now, it is quite a bit of a cautious mood ahead of these key events you mentioned, whether it's NVIDIA earnings or also the Jackson Hole meeting. Now, we are seeing, as you mentioned, the two big stocks really dragging Asian market today. And first off, we have Alibaba here down about 10%, having its worst day since April after the company having raised $10 billion in Hong Kong's biggest secondary share sale. Now, some concerns around the dilution in earnings, perhaps. And also, we are also hearing some concerns when it comes to how the company will be able to monetize given the weak Chinese economy. So that is dragging down not just the stock itself, but also the broader tech benchmark in Hong Kong, given some concerns around how this is also dragging, this is also taking away some of the market liquidity. Now, flip the board, we take a look at another weakness is really in Samsung Electronics shares. There's also falling by about 9% or so, and that is coming after the company announced that shareholder return plan as much as $80 billion for this year, but the focus really was more on dividend instead of the share buyback. So some disappointment around that front, especially compared to what SK Hynix has already announced. Now, when it comes to the Korean won actually outperforming Asian peers today, overall it is being supported by that broad weakness in the dollar, but also we are looking at the level of Korean won at its strongest level against the dollar in about 11 months or so. Back to you, Abir.
Winnie, thank you so much, as usual. Now let's focus in on the tech story. Alibaba shares have tumbled after it raised $10.2 billion in Hong Kong's biggest secondary share sale. That underscored its willingness to amass and spend vast sums to take the lead in the global AI race. Let's bring in Bloomberg's Anthony Stevens to discuss more on this story and more stories. Anthony, just starting with this, the move immediately drew criticism from some high-profile investors. What can you tell us more about that?
Yeah, it drew criticism from Michael Burry from Siow Capital, right? He was actually a supporter of the stock as part of like China's AI push, but he's taking some money off the table. He thinks that this is a very aggressive capital raising plan. He thinks that, quote unquote, he cannot bless the share issuance. And that speaks to some of the differences in capital raising mechanics between the US and in China, right? So in the companies in China, they keep going to the market to raise money to build up this war chest. Now, what's very interesting about Alibaba is obviously that it's changed tack between being just a pure e-commerce play to being a cloud play, with the AI cloud being a much bigger part of its upside. So it clearly wants to invest in the future. Now, what's interesting is actually how tight this deal came to market compared to how much Alibaba normally trades, right? It's a $10 billion trade. This is around 3.3, 3.5 ADV, combining the Hong Kong and US shares. So this is a lot of volume. This is even like 1/3 of a normal Hong Kong day's volume for the whole market. And yet, this deal went up at around 3.5% discount to the US close. So quite a tight deal. So there is some demand here. Now, it's interesting to note, of course, as you come on air, that the share price has gone through the deal. So how people manage the risk from here could end up validating Michael Burry and other bears, at least in the short term.
Okay, Anthony, let's shift gears a little bit, move stateside. Bloomberg also reported a scoop that some of NVIDIA's biggest customers have been told that the prices of its AI servers are going up, in some cases, by more than 15%. We're awaiting earnings by NVIDIA later this week. What kind of ripple effect will this have on the AI race, the rally that we've seen there, and just generally the market?
Yeah, it is an interesting time, as you said, right, into earnings. The stock has underperformed its peers significantly. It's the biggest part of the SOX index, and it has missed the SOX index performance by some 50% plus, right? So they're in a position where they need to start charging more to pass on some of its suppliers' cost. So this 15% increase in chip prices closely mirrors that of the memory price increase over the last couple of months. So they're just passing on the cost. Now, it'll be interesting to see whether their customers can eat that cost increase, right? And we're seeing some doubt in the market already today. We see a lot of weakness within the AI space, whether you're talking about Korea or Taiwan or China. So this will continue to ripple through the supply chain and the customer base in Asia. Now, we have to wait for the US to trade to see how its other customers, its hyperscaler customers in the US trade. So your Microsoft, your Amazon, how do they respond to this price increase? And also, how much will this move the balance away from those customers, depending on NVIDIA, to developing their own chips, where they may have a little bit more cost control? So this space is becoming very interesting as we go into those pivotal NVIDIA earnings. That stock has been off, down 4 times in a row after beating on earnings. So it'll be interesting to see what they say on forward guidance around margins, especially after this price increase.
All right. Anthony, thank you, as always, for those updates. Now, sticking with Asia, Shein is seeking to raise up to $1.8 billion in a Hong Kong IPO as it enters the final stretch of a long journey to go public. A Monday filing says the fast fashion retailer plans to sell shares at up to 49.5 Hong Kong dollars apiece before a trading debut on September 1st. Earlier listing attempts in the U.S. and London failed amid heightened scrutiny and geopolitical tensions. And Bloomberg has learned that Canada's government sees little chance of resuming trade talks with President Donald Trump before the midterm elections. The news comes as Canadian Prime Minister Mark Carney seeks to prepare a domestic aid package to help businesses hurt by U.S. tariffs, as well as the implementation of counter-tariffs.
Last spring, I warned that America is trying to break us so they can own us. And I promise that that will never, ever happen. We are keeping that promise. Canada is becoming stronger and less dependent on America. We are already giving ourselves more than they can take away. And we are just getting started.
Powerful remarks there by Prime Minister Carney. For now, for more on this story, of course, I'm now joined by Bloomberg's John Herskowitz. John, what led to the breakdown in these stocks, essentially, over the weekend?
Sure. While the headline item was medium and heavy-duty trucks, there wasn't really a single factor that led to the breakdown of the talks. The U.S. said that it offered concessions on things like lumber, aluminum, but Canada and its negotiators said the more that they looked into the deal, the more they saw that they didn't like. Some of these things included what they said were limits on Canada's ability to trade with other countries, and also domestic things about the use of French language and protections within Canada. So for the Canadian side, the more they looked into it, the more they didn't like it, and they decided it was time to walk away. And the whole backdrop of this is the distrust between these two countries, the best of neighbors for so many years.
John, I was taking a look at our stories, and the stats are also fascinating. It says 3 out of 4 Canadians support Mark Carney pulling out, but are afraid or worried about the future impact of this. So when we talk about the impact, what could we see from a U.S.-Canada trade war?
Yeah, I mean, the immediate impact is not all that great. It's $20 billion in goods between two countries that are about $900 billion a year in their trade. But this is about the friction between the two. For Carney, he spent a lot of his first year trying to cool down tensions, and now he seems to be preparing Canada for a long haul of tensions with the U.S., saying that he doesn't see, or what we've reported is that he's preparing protections for people who are hurt by these tariffs, and these will run for several months. No return to the talks before the U.S. midterms in November. So we have this as part of the friction that's going on. Carney has support of the Canadians. He's going to match it dollar for dollar. From the U.S. side, the overall impact is not great on the U.S. economy, but two states are worth looking at, Michigan and Ohio. They have a lot of trade, are involved in the same supply routes with Canada, and these could be affected. There are also congressional races going on in these two states, which could determine the balance of power in the U.S. Congress. So those are that's some of the backdrop for what's going on with the talks.
All right, John, thank you very much for that update. Bloomberg's John Herskowitz with the latest on the latest tariff war. Now, coming up on the back of Abu Dhabi Sports delisting, we will look to the regional market outlook amid changing investment strategies with 91's Alan Siow. That is coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Following the Lamad Wealth Fund's proposed buyout of Abu Dhabi Sports, investors are wondering if it marks a shift in regional investment strategies. So to discuss this story, we're now joined by Alan Siow, co-head of Emerging Market Corporate Debt at 91. Alan, good morning. Good to have you with us. That latest privatization effort is the second that we saw so far this year. Do you think that it marks a shift in asset allocation or investment strategy by the Abu Dhabi government, or is it a one-off, a temporary happening this year?
Good morning, Abir. Pleasure to be with you. I think it marks a moment in time. As we've just learned over the last couple of minutes earlier in your segment, we're in this market moment where one segment seems to be raising a lot of capital in both equity and capital markets, debt capital markets, and that's AI. And then this has taken the focus away from other sectors, such as infrastructure, which equally represent a very durable long-term opportunity, but one which may not be attracting the market's focus. So I think right now, what a lot of investors, and especially the large strategic ones, are thinking is it might be opportune to be conducting these sorts of investments away from the sound and light of public markets, where they're able to focus on the longer term.
Okay, so Alan, Abu Dhabi and Dubai actually have been on a push over the past few years to encourage more IPOs, encourage more public listings. Do you see these latest instances as sort of a shift to more take privates? Do you see more of that happening in some of the government companies here?
I think it's hard to escape that, this year we've had a very big geopolitical development in the region with the tensions over the Strait of Hormuz. I think if you look at the assets that are being privatized today, and if you look at the longer arc, for example, DP World's privatization back in 2020, you have two regional logistics and ports groups that are competing globally. So I think this might not necessarily be a one-off, but I think it is a very specific story, one in which, following the recent tensions in the Gulf, Abu Dhabi is looking to shore up and to potentially refocus its own efforts away from public markets on these strategic assets. It might not be something that expands to all other segments and sectors. It's probably too early to tell, so we'll have to watch that closely.
Okay, what about premiums? Do you think they compensate for the upside that investors could be letting go of?
Well, with the caveat that I am not an equity market specialist, I think what the literature says is that in a typical majority take private, the range tends to be something like 20 to 35% to the trailing price. I think that the premium for AD ports was well within that region and was in a similar range to when DP World was taken. I think investors are being given a choice. they can, obviously make a decision as to whether that's an appropriate premium to accept. But it seems, well within the normal bounds for such transactions.
Okay, and these moves, temporary is your argument, and it could be the result of what we're seeing happening in the region, opportunistic as well. But when you look at minority investors, do you think that when they see this happening, that they should be worried, or is that not something they should be sparking feelings of concern?
Oh, look, again, I come back to the first point. I think it's a moment in time. If we contrast, for example, what happened with Alibaba today in Hong Kong, the markets are never, let's say they want their cake and they want to eat it. When companies are raising capital, even at a small discount to the trailing prices Alibaba did, it can spark a correction. Equally, when they're taken private and capital is being repaid at a premium, they can also have room for pause. So I think both of those stories are on the same arc, right? I think in one case you have a company raising capital in an area that is got a lot of investor attention right now, and the other one I think is one where Abu Dhabi is taking a strategic step. I don't think that minority investors need to look into this and be too upset. Down the line, maybe in a few years, we could see relistings, we could see capital raises, and on that day, that will be a net drain of liquidity, as we're seeing with Baba today. So too soon to judge would be my view.
Okay. Well, there you have it. Too soon to judge, and don't be too upset yet. Alan, thank you very much for your time this morning. Alan Siow, Emerging Market Corporate Debt Co-Head at 91. And of course, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, coming up, the push to use AI tools in Nigeria's upcoming presidential election. We will discuss how it might bring more clarity to an often disputed vote. This is Bloomberg. Welcome back to Horizon's Middle East and Africa. Nonprofit organizations in Nigeria are planning to use AI to bring more transparency to the nation's presidential election vote in January. This follows a successful deployment of the technology during a local election last week. To discuss more on this story, we're now joined by Bloomberg's chief Africa correspondent, Jennifer Zapasaja from Johannesburg. Jen, good morning. Just walk us through how this worked at the election in the southwestern state of Hussain.
Well, it was quite interesting, Abir. What we saw from these civil rights groups was some of the AI tools that they were using was enabling them to track and collate some of the election results electronically using some of these independent tools that you were just mentioning there. And so based on Bloomberg reporting in particular, what was interesting about the final results that they got was that their figures actually matched what we saw from the INEC, which is like the International National Election Committee's final figures with what they call remarkable precision. And what we hear from a number of these groups is that they believe that some of the citizen-led collection then can now effectively be rolled out across various election states and different electoral parts of the country, essentially, just given how precise this was. And what we also heard from them, which is quite interesting, they said their models bypassed a critical weak point in the process that enables the count to be manipulated and which typically happens during manual collation. But of course, the key point in this is that this was quite a small election. And so the way that this would work in a bigger election, in particular in a national election, is definitely way more bigger on scale. And so we have to look at that. But it at least is giving some of these civil rights groups a bit of confidence about what they could do in January.
And Jen, the presidential vote has oftentimes been subject to some allegations about rigging. How can this technology impact confidence in the electoral process?
Well, and it's actually going back to the first, all but one of the elections that we've seen in Nigeria since the start of democracy, just about at the turn of the century, has been disputed. And so clearly there is a need for some confidence. And if we just take a look at the last election, participation dropped to just about 27% of the electorate in 2023. Compare that to what we saw in 1999, which was 52%. So clearly there is still a bit of concern about whether or not we'll actually see trust from some of these electoral voting institutions. And so really, again, the key is going to be how they scale this technology. What we saw in the Osun gubernatorial vote was that it covered about just over 3,700 polling stations. For the national election, that's looking like 176,000. And so really over the next few months, we're going to have to hear from some of these groups how they plan to instill some confidence that these AI tools can, in fact, give people the sort of confidence that they do need to see on a national scale.
All right, Jen, thank you, of course, as always, for monitoring these stories for us, Bloomberg's chief Africa correspondent, Jennifer Zapasaja. And that is it for Horizons Middle East and Africa today. Keep it here with us for Daybreak Europe. This is Bloomberg.